Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bullish scenario where we are looking for a 5-wave impulsive structure to the upside, and after wave 5 is in, we expect a bigger retracement to the downside. Usually a minimum target for a wave 3 is the 1.618 pulled from the low to the high of 1 to the low of 2, which is sitting at 50.4k. After eventually a wave 3 in blue is in, we are expecting a wave 4 in blue. Now it is quite difficult to know exactly when a wave 3 is in because a wave 3 can extend to much higher prices. Therefore, the only way you really know a wave 3 is finished is once you get bigger ranges. So what we are looking for is a bigger range, preferably the size of wave 2 if not longer, as most commonly in Elliott waves, a wave 4 takes more time to form than a wave 2. Currently, the common target area for a wave 4 in this blue impulsive count 1, 2, 3, 4, 5 to finish the green wave 3 is between the 0.236 and the 0.5 pulled from the low of 2 to the high that we have at the moment, giving you a target area between 48.4k and 46.3k, with the invalidation being the 0.618 at 45.3k. After a bounce in wave 4, we want to see price continuing towards the upside. Price is also approaching a resistance area here on the chart. You can see the blue box just above the green 1.618. sitting between 50.7k and 50.9k. This 5-wave impulsive structure currently has the highest probability of being an ending wave 5 on the daily time frame, where we have a wave 1, 2, 3, 4, 5, wave 4 bouncing between the 302 and the 05 Fibonacci taken from the low of 2 to the high of 3, and your most common target area for wave 5 is between the 1.236 and the 1.618 taken from the high to the low of 4, giving you a target area between 51.6k and 55.6k. The reason that this at the moment is the highest probability scenario for this local impulsive structure to the upside is because on the weekly time frame for a double 1-2, the second wave 2 would be incredibly short in time. Here you can see a wave 1 and 2 and then another 1, 2, and you would then expect a wave 3 to the upside to new all-time highs. However, what you can also see is the target box here for a wave 2 and the vertical lines. And what is important in this case are the vertical lines. These are Fib times taken from the low to the high of this wave 1. You can see that the low over here is made before the 0.382 Fib time, which is uncommon, rare for a wave 2. By far most common is that a corrective structure of an impulse is finishing at least after the 0.382. Also, this second wave 2 retraced to the 0.382 over here, Fibonacci, same as over here. However, the 382, we shouldn't forget, is a less common target for a wave 2. It is more common for a wave B, for example. So preferably in this scenario, you either look for a flat structure for more downside, or this wave 1 moves to the right side and you're still going to be looking for another wave 2, which in the end would give a deeper retracement nonetheless. Also in this bullish scenario, where we are looking for an impulsive structure to the upside in 5 waves, time is a problem. In this scenario, we are then looking for a finished 3, and if this is your finished 4, your wave 4 is incredibly short compared to your wave 2. It doesn't even make sense. For this wave 4, you pull a Fib time from the high of 1 to the low of 2 to the high of wave 3. Usually a wave 4 is longer than wave 2. However, because of the rule of alternation, if wave 2 is long, shallow and complex, wave 4 can be short, simple and deep. Now, short, yes, short, but with short, we're still talking about finishing after the 0.382 and not after 3 candles, while a wave 2 is so much more, right? So also here, the probabilities are low that this is the low of a 4. Probabilities are higher, your wave 3 moves to the upside, and you're going to be looking for a wave 4 to come, which then in the end would still give a bigger retracement. If we go to the bearish scenario, we are looking for a 3-wave structure to the upside. Here we have a 5-wave A, B, and then eventually a 5-wave C to the upside. Most common target for a wave C is the 1 to the 1.236, which has been passed, but the 1.618 is also still quite common, so that's why it's on the chart here, 51k. As mentioned, just above price, we have a little bit of resistance right on top of that 1.618 between 50.7k and 50.9k. If we pass this, then pretty much 53.3k is the next area of resistance. Now this ABC could then be part of a bigger flat structure. Here you're looking for a 3-wave A zigzag, 3-wave B, also a zigzag, which is most common in a wave B. And then you're going to be looking for a 5-wave C to the downside, preferably taking the low of wave A in an expanding flat. Most common target area for an expanding flat is between the 1.236 and the 1.38 Fibonacci taken from the high to the low of A, which gives you a target area between 51.6k and 53.1k. That is quite interesting because it has overlap with the wave 5 target area in the bullish scenario, where we count this as an impulse. So in a wave B, it's a 3-wave. In a wave 5, we're counting this as a 5-wave. But you can see there is overlap between the two scenarios here with regards to the target area. 51.6k to 55.6k is very important resistance from an Elliott Wave point of view. And also in this area, we have the high of the monthly gap at 53.3k. We have a monthly gap over here. We had the all-time high candle, quick move to the downside, and then we started ranging, leaving this gap on the chart. First touch, big retracement. Second touch, little retracement. And now the fact that we hit it for the third time increases the probabilities to fill the gap. But as I've just shown, this gap top is in the target area for a wave 5, right, at 53.3k, but also in the target area of a wave B, just above the 1.38. So it's an important level on the chart. With regards to CVD divergences, locally there is not much going on at the moment because we need to wait for price to range for a little bit longer before we can really trust CVD divergences, and also we are just below resistance, so it could be interesting to actually hit this level and then observe what happens. We do have some news today, so make sure you trade safe at 2:30 p.m. Central European time. There is some high impact news, as you can see, so we might get some extra volatility. And then finally, if we go to the probabilities of the different scenarios, then on the low time frame, which is the 4-hour chart, this section here, we are still looking for price to move towards the upside. We are waiting for a bigger wave 4 to form in that bullish scenario as well. Even in an ABC, preferably still looking for a wave 4 to form. We are currently in the monthly gap as well, where the high of the gap is 53.3k. Common target area for a flat B and a wave 5 are both above price at the moment. And the first resistance that we really have above price is 50.7 to 50.9k, and that is where we can then observe the reaction, because potentially that is the place where we can start a bigger range. On the high time frame, the daily chart, we are still expecting a bigger retracement at the moment after a wave 5 or B is in, because a double 1-2 has a very short wave 2 as explained earlier, and in a 1, 2, 3, 4, 5 impulsive structure, this move down is a very short wave 4. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.